Hey, you guys, what is going on? So, I am going to be taking you guys through the dollar index. Okay. We are going into December this week, December 1st, starting on Wednesday. And it is important that we look at the dollar index. One of the reasons why we want to look at the dollar index is because the dollar index basically can help us navigate between what can happen week per week with the dollar, including your major currency pairs such as AU, EU, NU, GU, USD Swiss, USD CAD, and then USD JPY. Even some of your exotics, and one that follows the dollar index very, very heavily is USDDKK, the United States dollar versus the Danish krone. So let's go ahead and let's get into it. And then I'm going to be taking a look at USDDKK just so you guys can see what I mean, because we're going to do what's called correlating, and we're going to positively correlate the dollar index with USD DKK. So if you guys do not know, I know my camera is over here, but I am Shaquan. Hello. I am the Forex coach. I am a Forex coach. My company is SLFX Trading. I may change that name soon. I'm not sure yet. Anyway, and what I am is a swing trader. So I teach busy men and women, busy traders, how to trade from higher time frames, i.e., monthly, weekly, daily, and 4 hour. Sometimes I add the 30-minute, just sometimes. But I teach people how to swing trade from higher time frames because you may lead a busy life. Because you lead a busy life, you may not have time to scalp. You may not have time to day trade. You may need to hold your trades for a couple days, maybe up to a week, maybe up to a month, sometimes 2 months. You just want to let the money run. You don't want to worry about the day-by-day operations of the market. So that is where I come in to professionally help you learn how to do that for yourself, okay? With my guidance, of course. So I'm going to show you guys how I do that here. Now, with me being a swing trader, it's important to understand what you trade or what I trade. I am a supply and demand trader. So I am trading who has control, the buyers or the sellers, right? I don't typically do too much counter trend trading, but I want to trade along the demand, the major demand, the increase of demand, basically the buyers and sellers of the market within the currency. But the currency is the supply. That's where supply and demand comes from. Supply is the currency, demand are the buyers and sellers. So let's go ahead and let's get into this, okay? So right here, right now, we have the dollar index. My left-hand side is the daily time frame. My right-hand side is the 4 hour time frame. So what I'm going to do is show you guys how to look at these side by side. Now, what I want you guys to notice is first who has the control. If I asked you guys who has the control right now, what would you say? Okay, I'm hoping you guys are going to say the buyers. The reason why the buyers have control is because you have to look at where price is going. The fluctuations of price are increasing. We have a high, a low, a higher high, right? The reason why we know we have a higher high is because, once again, if you look at the steady flow of the market, it is increasing. And where the highs and the lows with the fluctuations, the high, the bottom, the high, you can see that my exchange rates are getting higher from 96.24, 96.93. So the buyers have the control. With that being said, this is where the analysis will now begin. Now that I understand who has control, it is now my time to figure out where I want to enter alongside the buyers, if and as long as they can keep the control. So here's what I mean. If this is the last place the buyers came into the market, we had a small pullback here on the daily time frame, as you guys can see, around 95.51 or $95.51. This is the last place that the sellers came in, and then the buyers just pushed price up. You can even see this here on the 4 hour time frame, where we had a very beautiful fluctuation and then price pushed back up to the upside. Okay. This is where I'm going to now say, well, I need price to stay above, because of buyers, I need price to stay above $95.51, which means I need to buy higher than that price point. I don't want to see price come and touch that price point. I need price to stay higher than that price point or that exchange. Well, this is a price, it's not an exchange rate right now. We're not exchanging anything, but I just needed to stay above this dollar point, $95.51. So my structure, which I trade what I call estimation zones, or a zone. I'm putting that zone above that number at a particular area. Now, with my area, I like to teach this in my group because it doesn't take long for me to teach it, but it's the psychology behind how I teach this zone. But I'm estimating, which is why I call it my estimation zone. I am estimating this is where price can pull back to, which it has. And if it touches We just need evidence that the bulls or the buyers will come back into the market. And this is where another price action candlestick comes into play. So on Friday, price closed as this hammer, which means for me, when I look at the 4-hour time frame, you guys can see that we close as a doji, or you can say that it's a kangaroo tail. To me, it's a doji, more so also looking like a rejection hammer, because the wick on the bottom of the candlestick is longer than the one on top, and the candle body closed more towards the top. So it's a hammer or a doji. But I want to see how the bulls are going to come into the market tomorrow at the close of tomorrow's New York session at 5 o'clock p.m. Eastern Standard Time. If tomorrow is bullish, I will be looking for price to go up, the dollar to go up, particularly back up to $96 and $96.93. So I'm looking to see if the bears can keep control. So I want you guys to hear how I guided this information. Number one, I look to see who has control. Once I see who has control, I start the analysis point to say where I want to enter the trade. Next, I look at my price points versus if it's an uptrend or a downtrend. If I see that it's an uptrend or a downtrend, I need price to stay above a particular number in an uptrend or below a particular number in a downtrend. Once I establish that price point, now I want to draw my estimation zone. I only need one zone because I'm looking to only enter at this one particular place. So my zones are not and or, meaning if it goes below the zone, I'm selling. If it goes above the zone, I'm buying. No, it's just one type of entry with the buyers or with the sellers, and that's it. As long as price does not touch that one price point. Doing this, it helps you eliminate decisions in the market. And that is very, very important. Last step is once price touches that zone, I need a confirming price action candlestick to give me permission. I only need one candlestick. There are only 4 candlesticks that I use to enter trades. If it's not those 4, I don't enter. If it's only one of those 4, I will enter the trade, right? And so for me, I need to see what price does tomorrow. Now, let's go ahead and let's find USDDKK. So let's see what she's doing. Okay, so now we're going to do some analysis here. So remember, I told you guys that USDDKK is 2 constants in there. So USDDKK follows the dollar index. So the last fluctuation was right here. I'm going to actually put it on the 4-hour time frame right here for the daily. And then we had a high. And then this is where price stopped at. And now she's decreased. And now I want to see if price can stay above that price point. Okay. So now with this being said, we have a high, low, higher, high. We know that because the exchange rates aren't increasing, but we also know that because we can see how price is, it's just moving in an uptrend. Like you guys can see, she's just moving in an uptrend, her fluctuations, right? So now with that being said, if price can continue, if she can stay above $6.53, then and if the dollar index gets bullish momentum, we are going to want to buy. And it's literally just that simple, you guys. Okay. So this is the dollar index, and then this is a currency pair that we can look at for the beginning of the week. Now, really quick, what invalidates buying? What invalidates buying is if price passes a higher low. If price pushes past a higher low, we are no longer buyers anymore. A reversal has taken place. We need to now start to look for sales in the market. Now, once again, remember what I told you guys with this zone. This is not an and or zone. I'm only looking for a buy right here. I'm only selling if price passes this price point at the higher low. So once you eliminate decisions and once you understand what invalidates your entries, trading can become a little bit more easier for you. And if you lose a trade, it's easier to learn from it versus once again having too many decisions to decide from why you even lost in the first place. So it's literally a routine. So I pray this video helps you. I pray you guys have a safe trading week. I see a lot of opportunities this week on my watch list, and I have a lot of opportunities I will be looking at. But I will be sharing some more throughout the week. If you guys have any questions, make sure you guys inbox me on Tradingview. Make sure you guys are following me on Tradingview and even on YouTube as well. My YouTube handle is down below, SLFX Trading. So I'll talk to you guys in the future.